Hey, it's me, Rob Ryan. I am back with another incredible conversation here on Entrepreneurial Thinkers with one of today's best and brightest entrepreneurial thinkers, Matt Schaar, my digital friend that we met on Twitter back in the day at the peak of kind of the online pandemic, post-pandemic world 2020, 2021-ish. And I've been a fan of Matt's work ever since then. And today he took us inside the world of the organization for which he is a vice president and partner, which is Accion VentureLab, which is a subsidiary portion of a larger global organization that's been around for like 60 plus years called Accion.org or Accion, the organization. And they are specialists in investing private capital into fintech or the financial markets around the world to facilitate the development of new financial technologies or financial tools to increase financial inclusion and access to financial resources on a more widely globally distributed basis. So we take a look at kind of the traditional venture capital industry and private capital industry as it has grown and emerged here in the US, and then how those lessons and tools and areas of expertise are being applied beyond the United States, but also inside the United States into underrepresented, undersupported groups. We talk a lot about why to invest in women entrepreneurs. We talk a lot about the opportunities to invest in what's called in traditional industries, old school traditional industries that exist both here in the US as well as abroad, and how those industries all have unique capture opportunities related to financial services to essentially improve the efficiencies or the return opportunities for that industry in that country or market. He taught me a whole bunch of things I didn't know, and we had just a great, joyful conversation that we hope you will enjoy listening to and watching as much as we did making it for
you. We are so grateful to be supported by these community champions: Sales MD, Team Friday, Realist Lab, Kiana Patterson, Diego Chavez, Jer Boucher, Heather Ryder, Janine Sua, Lily Roca, and Steve Kernan.
Hola, hello, hi, bienvenido, welcome back, or welcome to Entrepreneurial Thinkers. And as you may or may not know, this is the show where I'm the lucky guy here. I get to have weekly conversations with some of the best and brightest, what I call entrepreneurial thinkers across all sectors and segments of society and industry, as we come together to try and leave this world a little bit better than we found it, which that call to action might be a little bit more appropriate nowadays than it has been even in the past. So I'm especially excited about today's conversation where Matt Schaar, and I'm going to introduce you and tell you a little bit about him, but Matt and I are going to try and leave the world a little bit better than we found it this morning by the end of this. So let me tell you about Matt. He's the vice president and partner at Accion Venture Labs. Matt is someone that I met online, but we are now forging a new level of our relationship today in this conversation. Matt's journey is fascinating, and it's one of the things that made me most curious about him, and frankly, one of the things that helps me to believe that he is truly an entrepreneurial thinker in the broadest sense of what I mean when I just use that phrase. His journey is one of evolution and purpose. He started in the aerospace industry, and he has subsequently worked across a range of different technical and customer-facing roles in a number of different companies and kind of adjacent related industries. He spent years at the forefront of innovation. He's worked with advanced technologies, and he's constantly kind of pushed the boundaries of what's possible no matter what he's been working on. However, his desire to create more meaningful impact led him down a different path, one where he could help shape the future of financial inclusion across the world, well beyond his own communities and in ways that empowered and lifted up literally millions of others around the world, of which he'll tell us about as we get deeper into this conversation. As a vice president and partner at Accion Venture Lab, Matt now works with a team that invests in cutting-edge fintech solutions designed to empower underserved communities around the globe, from startups tackling global financial inequities to ventures driving innovation in emerging markets. His work is rooted in the belief that financial tools can truly unlock opportunities for millions, and as we love to say here, right, try and leave the world a little bit better than we found it. He's as founder-friendly a leader as I believe you will find in the venture industry. He uses his voice very confidently and persistently in public forums to advocate for doing and being better. As I've watched his career and impact from afar since we discovered one another in the old Twitter days, that forum that we don't talk about much anymore, I've been both impressed but also really just curious. And as the years have passed, I've come to think of him, as I said earlier, kind of one of the ideal entrepreneurial thinkers in the venture and entrepreneurial space, and thus the invitation to our conversation. He's a fierce athlete, an ultra runner with a passion for pushing limits, a husband, a dad, and a diehard Big Blue University of Michigan fan and alumnus. Wouldn't be a podcast if I didn't get that in there for him. And so whether he's navigating the complexities of early stage investments or he's training for a grueling endurance race, his drive to achieve and his commitment to growth kind of remain unwavering. So I'm super excited to have Matt here with me. Matt, welcome to Entrepreneurial Thinkers, buddy. It's a long time coming.
Yeah, thanks, Rob. I need to invite you to heaven forbid this isn't for another few decades, but you're gonna give the eulogy at my funeral, okay? Because that was like, man, Rob, you've always been like a hype man, and I always appreciate that about you. And that was a hype man worthy type of intro. I'm very grateful for it.
My pleasure. And hey, it's Monday, so like it's a good way to start your week, right?
Sure is. Absolutely. Thank you.
That's awesome. It's a pleasure to see you. Thanks for taking some time. We had mentioned off air, we got some family illness that's sweeping through the household there. So I appreciate you carving out some space to visit with us today while you go back to taking care of your family when we're done. And hopefully you'll stay healthy through the rest of the winter/spring. I don't know what the little, what is it? What's the animal that comes out or doesn't come out that tells us if spring or summer is coming?
In like a lion, out like a lamb. Is that what it is?
Something
no,
like
you're talking the groundhog. The
groundhog.
Groundhog Day. That's
Groundhog.
right. I have no idea what Punxsutawney Phil did this year.
Yeah. Once you move to the West Coast, like me 27 years ago, like you just kind of forget about that stuff.
Man, as someone who lived in the Bay Area for a few years, I completely resonate with that. I remember distinctly like walking out my door in San Francisco, and it could be July and I'd be wearing a parka, or it could be October and I'd be wearing a t-shirt. And we get 4 seasons here in DC, which has its upsides and downsides. I'll just say that.
100% true. So, all right. So we don't know what the hedgehog groundhog is going to tell us to do, but we're gonna enjoy this conversation regardless. And the conversation there's a lot we're going to talk about, man. You have both a rich background and kind of a more diverse background than the typical person in this entrepreneurial kind of venture private capital space. But you do have now an immense portfolio of work that is built up experientially in this space. And so you bring so much to it. And there's so many different ways that you and your firm look at this that I really want us to unpack today. Because the fundamental question is, to me, right, what can we do to inject more entrepreneurial thinking, kind of more non-traditional thinking into this world of private capital? So I'm going to start with the first obvious question that came to my mind as I was putting the script together, which is how do we get more venture capital or private capital in general into more hands of entrepreneurs around the world who aren't just white dudes who graduated from Harvard, Stanford, or UC Berkeley?
Yeah. I mean, I think it's a fundamental question. I think maybe I'll respond in a couple different ways. I think there's been, and this is honestly, having been in the venture-backed space as an operator now, as an investor for over a decade at this point. I think there's oftentimes the belief that if you are building something that you need venture capital, right? I think there's always this presupposition that I need to, in order for me to grow and scale and have immense success, I need to find a VC or a fund to work with me on building and scaling this idea. And I think I always like to start off with the notion that not every business that someone starts has to follow that playbook, right? I think a lot around the fact that there is a strong, and we know this because so many of the customers that our portfolio companies serve are small businesses. I tend to believe that small businesses are really the fuel that drives any economy, whether you're in the United States or a market outside the United States. And I think I would say there's more that can be done around, I think, expressing what it means to have a successful business. Rob, you've been an entrepreneur and you recognize that not everything needs to be $1 billion exit.
100% true.
I think there's so many different types of factors that I think of, an entrepreneur should think about. So I always say fundamentally, let's start with that question. What is it you really want to build, and who do you want to build it for? And I think the reason why that's important is because if you're building, I just know how much energy it takes to build something from scratch. If you don't believe with your entire heart and soul around this, then you're going to be working 80, 90 hours a week on an idea that you're kind of halfway passionate about. And I think that can lead to burnout. It can lead to stress. It can lead to just a lot of, I think, ancillary or negative consequences that someone may not think of when they want to build a company. So, and then so if the answer is at someone's stage of life that they believe that what they really want to do is find local sources of capital or other types of non-dilutive capital, that this is where I think people can really open the aperture a bit more and start to say it's not just venture capital that will help spur on business growth. Um, there's local community banking institutes, CDFIs around the United States. There are tons of foundations, family offices, et cetera, that are not necessarily looking for venture backable type of companies, but essentially looking to help their local communities grow and thrive. And I think that's only going to increase in velocity. I think it's going to
Okay.
increase in attention. I think there's just a lot more savvy thinking around, I think, that dimension of capital that I think a lot of founders and entrepreneurs should think of. So I'll
I
start with
love
that.
that.
I'll
Yeah,
start with that.
I love that. That latter part, especially. I don't know that I've heard anybody articulate it that way recently. Um, what it brings to mind as I'm listening to your answer is also just remembering, right? Venture capital, in the sense that we talk about it and that most people understand it, is really only like what, like 50 years old ish as
It
kind of an
is.
asset class, right? Like late
Yeah.
1960s, early 1970s, 71, 72, something like that out in Silicon Valley,
It is, and it
right?
also represents if you did like a whole pie chart of private capital, private equity-based capital in the United States or globally, it's like a, 15, 20%. I don't know the exact number of it, but it also is a very like small sliver of the total capital stack.
Yeah.
And so in many ways, VC is kind of designed to be exclusionary, you know?
Right.
because
Yeah.
if you think about the entire I think value chain of venture capital. Ultimately, it starts out with someone saying, I want to give money to an investor to make decisions around this, but also acknowledging that it's very high risk. And that represents a small component of that person's capital stack. If you think about the LPs that put money into venture funds, they're also putting money into all sorts of things, public equities,
Yep.
bonds, whatever it's going to be. And sometimes even these, small business types of loans, like they might be doing private credit. So I think that's also like of note that again, there are so many different ways someone can think about intelligently raising capital to fund their entrepreneurial journey. And so that kind of goes into your question is to how we make venture capital more inclusive and available to more entrepreneurs. And I think this is it's such a tough question because look, VCs have been trying to do this for what, decades, trying to create more diverse outlets of capital, and just it seems like sometimes there's just kind of a rubber banding back to a way of how it is. We're always just going to we're going to fund entrepreneurs that fit an archetype. Um, and I think one uh, and so I think we have to have like an interesting conversation around how you ultimately de-risk entrepreneurs in the first place. So
Mm.
so that's why you think of all these different capital sources. What can a founder bring to the table that suggests to a VC, hey, I may not fit your archetype of what you've invested in the past, but because I've gone out and sought these other sources of capital, I've bootstrapped, I've built a lot more, I think, layers of trust. You VC who are naturally risk averse, despite the belief that you are an early, you're investing in high risk, ventures, you can trust me as you would trust anyone else who fits your archetype. So I
I
think
like
moving
that.
away from this idea of like, well, we need to have these pattern matches around behaviors, schools, whatever else. I think there's more that entrepreneurs, I mean, we generally writ large can think of to try to make it seem like a venture is more backable and more trustworthy when they get to that conversation in the first place.
I like that, right? I mean,
Yeah.
because I think then it shifts, and for some reason, I don't know exactly the date when this began, but somewhere in this last, say, 15, 20 years, right? Everything in that earliest community of, excuse me, entrepreneurial support organizations, everything programmatically seemed to get focused on, okay, let's just educate them. They come into us, and then let's educate them on how to get ready to raise venture capital, right?
Yeah.
And it's as if we skipped all these other related discussions that you just highlighted in that one answer, right? Which is the idea that, well, wait a minute, maybe if we can get these entrepreneurial support organizations, which exist both, internationally, nationally, locally, community-wise, et cetera, in all kinds of different forms and functions, if we can get them teaching more about the various ways to build your business to de-risk yourself, so that either, and it's just my humble opinion, I'd love to hear what you think, like either we're putting you in a better, stronger position to have a standalone viable business that doesn't require venture capital, right? Because we've taught you the variety of ways to essentially de-risk yourself, right? Or as a result of that, we have helped you de-risk your business in such a way that then if you do need venture capital, if you do need outside private money, you're more compatible with that.
Yeah, I think that's absolutely right. I think it's also, I think, within the midst of that, it's helpful to understand what a venture fund is really trying to accomplish. And I'm just talking about like traditional VC that doesn't have some sort of impact mandate or component that we do at VentureLab. But I think a venture fund is there ultimately to try to deliver on financial returns for its LPs, right? And what that just means is they need to be looking for outliers. I think there's kind of two different pathways by which I think VCs kind of operate. They either want to operate in a way where they think they can have a portfolio by which they're going to have a roughly 40 to 50% success rate. And by success rate, it means their companies are ultimately generating roughly 3 to 5x, actual distributions back to their LPs. Or they really power law it, and they're really trying to find 1 or 2 deals out of 40 that are going to return like 15 or 20x back to the fund. There's different philosophies around that. I won't get into the gory details around all that stuff, but I think it is really just helpful. I think I don't also know if ESOs, these entrepreneurial support organizations you're talking about, it'd just be good for them to talk fundamentally like, hey, what does venture capital exist for?
Yeah.
Like, why is it here in the first place? And why was it constructed in the way it is? That I think that also could just be helpful, because I think that also helps entrepreneurs think more of what are the complications that come along with actually taking venture money? Because there are many of them.
No, I agree. Again, like there are in every decision related to any business, right, or career path, right? There are always complications. There are give and takes. There are trade-offs that need to be understood.
Yep.
And I think somewhere again in this, it wasn't just like this last hype cycle during which we met, like in this 2018 to 2021. Like it's been this last like 15, 20 years, kind of lingering, lurching movement towards the entrepreneurial support organizations, as I refer to them, and they again come in all kinds of different forms, seem to just become like the minor league feeder system for the venture capital community, and that was it. Like that, like then they adapted that. They began to view themselves as that. And then we kind of went left off the rails from, using them as a filtering mechanism, which is what they should be. And then strangely somewhere in there, and this is not to let VC off the hook supposedly altogether, but like strangely somewhere in there, then the onus seemed to get put on venture capitalists, right? As hey, why aren't you more equitable? Why aren't you more diverse? Why don't you spread your investments to more people that don't look like just the same people? And when, yes, they should do that, but also, like, in fairness, the whole kind of pipeline feeder system of education and development got broken somewhere. And then the venture capitalists are like, wait a minute, like we were never designed to do that. Like we're literally supposed to pattern match. That's our whole gig, is just picking these weird winners. And yes, we're going to keep going back to the same pools. So sorry that we're not giving it to more people that don't look like us or aren't from the same places as us, but like literally our job. And that's one of the big things that you said it already. You said it in your lead, which I love, and I say it a lot, is, let's not forget that, and nobody likes to say this in the venture world, but like the founder is not the customer. Like the client customer of the venture capitalist or the private equity person is the limited partner investor that put their money in there, or the institutional investor.
Well, it's a customer. It's not the customer.
Or is it a user? right?
Yeah.
Almost in that
It's yeah,
sense.
it's in many ways, it's kind of like go back to in the same way that I am a customer of a mutual fund that in the same way that or like a bank giving out a loan, like that bank is considers its customer as someone who ultimately has some sort of fiduciary responsibility back to the bank.
Right.
There were two things I was gonna touch on from what you were commenting on. One is going back to this point around ESOs. One of the things that I think one of the challenges with all this too is, and I know we wanted to have some conversations around what it's like investing outside the U.S.
Yep. We'll get
But
there. Yep.
one of the things that I've also seen in a few examples is ESOs uh, also putting their founders in a really really tough position when it comes to future fundraises. One of the things that's always part of the decision making process in evaluating a company is who's invested in you beforehand. And as a seed stage investor, we typically have seen there's usually a couple of other investors on the cap table when we see a company. It could just be angel investments. It's usually the founders have a pretty substantial component of equity in the company. But you do have these examples of companies that went through an incubator program, and that incubator took something like 30 or 40% of the cap table. And when we look at that, it's really tough. It's really tough for us because we have to figure out, okay, ultimately, we have far less ownership to work with. You have capital requirements, and I think that's a shame because I think there are a lot of founders who kind of see these ESOs as a pathway in, but then they don't think about the consequences of like what the ESO takes from you
Right.
in order to make it to try to like kind of get you a leg up. So I oftentimes have to tell founders before they even are thinking about going to an accelerator, like look at the terms. I think that's why
Yeah.
YC has been so successful is because they just take such a small component of the cap table, for that investment. So that's one point. I think the second one I also mentioned too is going back to this whole idea of who the customer is in venture capital. I think one helpful aspect of being at an impact investing fund is, and we kind of outline ourselves as a fund that looks for market rate returns, but then also we have some pretty we have some heavily monitored impact requirements, and a lot of that is attributed to the fact that our LPs have asked for it. And so I
Yeah.
always go back and say, look, I think LPs have an opportunity to also really, I think, set the trend here around asking their fund managers to report back on these things and to set expectations. And I think we have a great relationship with our LPs who ask for those impact metrics, particularly because they also have so much knowledge just in the basis of what type of organizations they are to help us really move the needle on that impact. How many women founders we're looking at, what percentage of our portfolio companies that they serve are women. What are we seeing in terms of income movements and improvements? So there's all these things that I think if we didn't have LPs like that, we would not be nearly, I think, as far along, I think, on really making sure we understand how to measure impact in really effective ways. So I have to give them credit, and I think that's a great signal for other LPs to say, hey, others are doing this, and I
Yeah.
think there's an opportunity for you to explore it as well. It's not easy for anybody. I mean, it just requires a whole new way of measuring outcomes, but clearly some of some really really robust organizations are doing it quite well.
We are so grateful to be supported by sponsors like our friends at Haney and Company. We all know that in today's complex financial landscape, having a trusted advisor can make all the difference. Since 1960, Haney and Company has been providing comprehensive accounting services to a diverse range of clients, from small businesses to large corporations. With nearly 400 professionals across 13 locations, they offer services in tax, audit, business consulting, and client advisory. In fact, their commitment to excellence has earned them recognition from Accounting Today and Forbes magazines. At Haney and Company, though, it's not just about balancing books. It's about building lasting relationships based on trust and mutual growth. So visit HaneyCPAs.com. That's HaneyCPAs.com to learn how they can support your business's financial journey. And that's a perfect segue, actually. We're going to skip ahead because that sets me up to talk about Accion and Accion Venture Labs.
It's Accion, by the way. It's
Accion. Sorry, thank you.
It's Accion in Spanish. It's very easy to
okay.
remember.
now I know Accion and Accion Venture Labs as part of the organization. So I want to go back. I was fascinated as I did some of the research, and then I want you to tell us kind of its origin story. Talk to us about who its benefactors are, who its capital partners are, right? Its mission. We're going to get into all that, but I was fascinated to find out that it's got its real roots way back when in the 60s in kind of the Peace Corps people. Like there was some early leadership were Peace Corps people, which is fascinating. So it's founded back in 1961, which is incredible, right? It lists on the website, it says you guys have helped build 267 different financial service providers, and it's probably up to more numbers than that even in current terms, that serve low-income clients in 75 countries and have reached 400 plus million people. That is amazing to me.
Yeah.
So please tell us kind of this origin story, and then let's get into pulling more of Accion apart. And thank you for correcting my mispronunciation of it all this time.
Yeah. Well, I was not alive when it was started, so I can only speak kind of in third person around all these things. But so the reason why it's Accion is because it got its start in Central and South America. And there's actually kind of around the same time that Muhammad Yunus was working in Bangladesh and building up the Grameen Bank, and this idea of what if we provided small scale loans, and microfinance is kind of the term that is used, to local entrepreneurs. That was kind of the basis of microfinance, is that ultimately people were already informally lending to each other. You have things called chit funds, you have SACCOs, you have all these different types of lending circles that exist all across the world. And mainly because of the fact that they could not get access to financial services from a traditional financial services provider. So a couple of grad students from Berkeley built out the origins of Accion in the 60s. And I'll fast forward a little bit, but basically over time, I think what they discovered was, maybe what was more important was not necessarily being an institution itself, but actually helping enable and advise existing financial institutions to help them build more accessible and inclusive forms of financial services. So they started, that started on a couple of different angles. One was they really began to advise like large national banks like Banco Sol in Bolivia and a few others, and how to really do this effectively. There really was the roots of what's called Accion advisory now. And that is still a legacy that lives on, is that they work with larger financial services providers and kind of helping really smartly build out these financial solutions for their clients. And a lot of that work is grant supported from these kinds of institutions I was mentioning, family foundations, sometimes development finance institutions around the world. Just kind of help because they recognize that Accion has a deep and broad network of talent and knowledge that can help with those dimensions. Along the way, too, though, I think they started to recognize, well, look, as I think would also be useful is that, just like we were talking about beforehand, is that sometimes these financial institutions or financial services providers need capital, right? They need investment. So Accion started doing that as well. And one of the kind of seminal moments in Accion's history was in the 1990s when Comportamos, which was a Mexican microfinance institution, went public. It was one of the first MFIs to ever go public, and at that time, Accion was a shareholder in Comportamos. And so really now Accion had this. And by the way, just as a segue, there's a Harvard Business School case on Accion's history that goes into far more depth on this. Actually, it's funny. There's Accion co-sponsors an executive program with Harvard Business School every year that they bring about 40 practitioners across financial inclusion. And the first case they do is actually this case that I'm talking about. And I was in these classes a couple of years ago, and it was funny because basically, how if you ever have seen how HBS does their cases, but it's like basically people just sort of have like the ongoing debate and dialogue about the case in their in the class. and I just had to stay quiet the entire the entire time. And Michael Schley, the CEO, was sitting next to me, and I was asking like, am I allowed to say anything right now? Like, can I make
Right.
comments on what happened here?
Right.
He's like, yeah, no, it's okay. Don't worry about it.
Funny.
Especially because like the students will also like start to they'll start to just like kind of trash the
Of
like the
course.
recommendations that like he
Sure.
made or someone else. But
Right.
anyway, that's a non sequitur.
What a unique experience for you though to be sitting in there learning about it for your own purposes, but then
Exactly.
like amidst a group of people who are just critiquing it, so to speak.
Exactly.
Right. Yeah.
Exactly. So that gets us to like the 90s and 2000s. Accion now has like a balance sheet by which they which is a great spot to be for a nonprofit. It's like to have capital sitting in your on your books that you can then utilize to invest,
Right.
innovate, whatever else. So they were they were LPs in a couple of different funds, but also they recognized that they were really doing a good job, I think, of working with larger FSPs, but they really wanted to do a bit more when it came to the tip of the spear in fintech. So all these new emerging startups that really innovating, and this is where VentureLab started about 13 years ago. Uh, Started out with just some money off of Accion's balance sheet, made about 20 investments out of that fund, including two of Mexico's first unicorns or unicorns. So Clip and Confio, which both are kind of ubiquitous in the Mexican fintech scene now.
Yeah.
And off the heels of that, 2019, we raised our first LP-backed fund. And up to this point, we've invested in over 70 companies across the globe. 90% of those are outside the U.S. And yeah, we have no signs of stopping.
What's the in that no signs of stopping? Kind of what's the is there a specific mandate or vision for this decade or for the next 10 years or something, or are we just let's just keep doing what we're doing and reevaluate every market cycle?
Yeah, I mean, I think for us, I always like to look at it from the perspective of what Accion is doing and then what VentureLab is specifically focused on. Because I think Accion wants there's a continuance of trying to build more of these capital structures to really serve the entire value chain of financial services providers. So as mentioned, we made targeted investments through balance sheet called Accion Emerge into like some of these larger financial services providers. Last year, Accion there's a digital transformation fund that invests in kind of later stage financial services providers. Many of them are they're still private. That was about $150 million fund, $125 million fund that we announced last year. Um, so I think we're still kind of looking at different places across like that financial service providers journey. But I think for us at VentureLab, I think we're always going to stay fairly early. I think we're always going to stay focused on those markets I mentioned. I think where we see evolution in this is what type of models we invest in. So I think in 2012, 2013, we were looking at a lot of models that were just sort of tech-enabled lending services
Sure.
or alternative credit score providers. And I would say over the past few years, there's been a big evolution, I think, in leveraging what we call embedded finance, where this is a philosophy I think that's held by a lot of thinkers in the space, but is that every software company or many software companies have the opportunity to become a fintech. Um, it's just a matter of where within that existing that solution set for your customers, where do financial services fit in there?
Sure.
So a lot more recently, a lot of our investments have focused in on these legacy type of industries, like construction or e-fish or fisheries or these sorts of things, where there is need for some type of financial service, whether it's insurance or
Mm,
lending, or even just smoother payment flows. And I think we're spending a bit of time looking more into that component, but also into some of the infrastructure that is necessary to enable embedded finance. There was I don't know if you know Amber Illig. She's a GP at the council up in San Francisco.
I've never met her, but I know of her. Yep.
Yeah, so she wrote a really good article last year called Tech's Third Wave that was mentioning a lot of this around, this is where there's an opportunity for innovations in these legacy industries. And for us, I think I really like that article from her because it sort of describes what we're thinking of doing to a to a T, and that we think not only can you make these legacy industries more innovative and more accessible to people in these markets we operate in, but also that there are financial services opportunities that you can embed within that. So
That's
there's a
amazing.
lot more for us to learn. Yeah,
I'll go find that article and we'll link it in the show notes too, so folks can go
yeah,
check that out. Because
sure.
I have read some of the stuff she's written over the years, and she's a very articulate
Yeah,
communicator.
yeah, she's
So
great.
I'm sure it's great. It's funny. I'm old enough as I'm listening to you. I'm old enough to remember kind of essentially like the GE example of this all, right? So General Electric, for those who are younger, won't understand at all about what I'm about to talk about, right? But General Electric was this massive kind of old school national conglomerate industrialist company that made stuff back in the day. But then by the end of its useful life cycle, over 100 years or so, in this last, say, 30 or 40 years, it essentially was predominantly a financial services company known as GE Capital.
Hmm.
And, one of its famous kind of private equity like CEOs, Jack Welch, once said, right, like when I went to the company, I was an industrial manufacturing guy, and then when I like finally took it over and I was shepherding it towards its latter stages of life, basically my biggest assets went home every night and walked out the door, because basically I just ran a capital services firm that I didn't really understand, right? And I
Mm,
didn't really understand kind of how to manage that kind of a business. But
mm,
what you're saying is that that's essentially what they did internally, and then kind of in a macro in many ways, right? Is that they were an industrial manufacturing company that saw a bunch of needs and applications for better financing, better purchasing, better invoicing, better all kinds of stuff with their vendor community and their supply chains. And then out of that, they birthed something that then became useful at a macro level on a global scale. And that's fascinating. Like, first of all, I'm a huge advocate of that, but I was not aware that that was another layer of how Accion was approaching this, right? Is this idea of let's not just always or only facilitate like the brand new cool hip fintech that's going to democratize finance for the 7 millionth time, right? Which doesn't really democratize finance, but tends to just democratize access to already existing accessible finance for just a small group of users.
mm,
But let's go into traditional industries. I love that. Like, let's help, especially when you marry, from my opinion on the outside, when you marry going in traditional industries and then going into traditional industries in non-US markets, right? And not
mm,
exclusively, as you said, but like to focus outside, because
yeah,
that's where these industrial companies and these industrial supply chains are essentially the backbones of these economies, right? I know you travel a lot back and forth to Southeast Asia, you travel a lot to the African continent, right? I mean, like, those are places on the planet where traditional industry, which we don't think as much about in the US anymore,
yeah,
or in some of the developed Western European countries, right, which have become more services economies.
mm,
Those industries are the backbones of those economies. And if you can go into those industries and say, like, rather than create some cool new hip consumer fintech tool, like, we're going to help you, this CNC machine tool industry in Southeast Asia, we're going to help you create better financing mechanisms, better financing institutions inside of this. That's
yeah,
fascinating.
yeah. Well, it's also and I think you're absolutely right. I think and there's a part of me that actually sees this kind of return to its roots happening in the U.S. as well. I think we are seeing, um, we're seeing a lot of this around the American dynamism movement, as you want to call it, that Andreessen is putting up. But this idea that there are these legacy industries that are ripe for that the U.S. has like a good underpinning for, but just kind of drifted away from because of emphasis on other lucrative industries, such as ironically financial services. But you're right though. I think what I always love to tell people is the US ironically is way behind when it comes to financial services innovation. I always when people discover examples of this, like when they hear about the origins of UPI in India, and recognize that the country basically lifted tens of millions, if not hundreds of millions of people out of poverty over the course of a decade or so, just because they built this digital public infrastructure that patched in anyone or nearly anyone and everyone in the country into access to basic financial services.
Yeah.
Um, and I keep I keep thinking to myself, man, if people realized, and then we actually saw this, it was interesting. We saw this, even with the evolution of mobile phone technology. It's almost as if countries like India sort of skipped over the landline
Sure.
and just
Yeah. The
went
the
right.
classic example is Mexico.
Yeah,
Right? They did exactly that, and that's why. And then that not only facilitated the advancement of the country in the early '90s, late '80s, but it also made Carlos Slim Carlos Slim,
yeah,
right? Because he basically just
yeah,
skipped ahead and said, "We don't have the capital infrastructure as a country to be able to put landlines every place we should put landlines.
yeah,
So let's just skip a whole generation of technologies." Yeah. So
yeah.
you're equating that to saying there have been those types of skips forward from a financial tools, financial inclusiveness, access point of view in lots of places around the world that literally
Yes,
have then left us sitting here, wondering if I have to go to the bank to send a wire transfer and talk to a human.
yes, that's right. But then I would also say that on the flip side of this is the US is still in general, and for now, knock on wood, is still the least expensive place to get access to capital. Just giving you as example, and it's not just a matter of what the real interest rates are, but also just in timing. The conversations I'll have with founders around them just trying to get to get a line of credit from a financial institution or raise debt, and their risk-free rate is 21, 22%.
Yeah.
So what that just means is that moving downstream, it's like you need to still charge your customers 30, 35% just to get those interest margins positively. And when we talk about the whole idea of being a venture backable company in these markets, a lot of times again it's in one of those downstream effects in that you have this really difficult situation in which you want to provide accessible financial services, but then also you have to charge your customers just in a ridiculous rate compared to what you get in the US. Because right now, like, you get a credit card in the US is 24, 25%.
Right.
You can get a secured loan, you get a line of credit on your home equity line, it's 8%. Um, and so in many ways, I think a lot of investors might see that and be like, wait, oh my God, like you're charging just insane rates to these customers. And from an inclusion angle, oh my God, you're charging these insane rates for customers. But then you look in comparison points, a lot of a lot of the rates that these customers, like the small business, a subcontractor in the construction industry in Colombia or Mexico right now, they can get a loan for less than a 90% APR.
Right.
It's absurd. So it's always the comparison points, and
Sure.
I think for everyone just to be aware of what those factors look like, but also just the fact that it's just so much easier in the U.S. to get access to credit. But we do see though that there are still places in the U.S. in which it is still inaccessible, and that's why we've invested in several companies here in the U.S. as well, because we believe there's still more to be done on the financial inclusion lens here too.
Yeah. Sounds like the world could use about 100 more Accions.
Well, we are in a very fortunate spot. I think especially what's been happening in the past couple of months, we've seen a lot of our colleagues or fellow organizations that are doing similar work to us, really really struggling under the decisions that have been made with in the current administration. If you want to have my honest thoughts on this, we'll take it offline. But I'm sure you know my feelings on some of these things. But I think we just had a leadership meeting. This was 2 weeks ago, and that was one of the things that Michael, our CEO, had told us. He said, like, we are in an extremely fortunate position to be able to do the things we're doing now and to show the world that inclusion is a word that and a world that we should all embrace, as opposed to something we should repel.
Yeah.
And it's something that and it's really also great, I think, to work with some really great financial partners on that front, the institutions that are LPs, and also grant providers to broader Accion, all believe in this work, and I don't see any signs of slowing down from them either.
That's awesome. Is there a lot of like you work in DC? Is it headquartered in DC? And then what the origin of that question really is more in your limited partners in the institutional organizations that support you. or either grants or investors? Is there a lot of public-private partnership? It feels to me as an outsider like there would be. Like this would be a natural place where you would get some kind of public organizations backing these types of things on a global basis. But is
Yeah.
that true?
Yeah. Well, so we are based in DC. We used to actually be based up in Cambridge, Massachusetts. We consolidated our offices after the pandemic. And I think for us, yes, we work with we've worked with a handful of different public institutions. We work with several these development finance institutions that exist within governments around the world. So several of the European DFIs, which you can count as a public-private partnership between us and them. A lot of these family foundations are different family offices. There's a lot of different, I think, organizations that we partner with. What I would say though too is there are a lot of I think advocacy organizations that we're partnered with who have their roots in DC as well. So like the Global Impact Investing Network, Impact Capital Managers. There's a few others that that we work alongside, and they're partner organizations. And usually DC is a really great, like I say, organizing place for us to meet, and especially talk with lawmakers as well, and kind of get their perspectives on things. And what's really great too is I think in the midst of this like political upheaval we're seeing, I think a lot of Congress, congressional representatives, senators, and U.S. reps believe in the power of small businesses as well. And so I think, and many of them also are involved in the Foreign Affairs Committee. And so that's a really interesting bridge, is that you'll find every single politician, Republican, Democrat, want to see small businesses in their communities thrive.
They need to.
Yes,
right? Essentially. I mean,
do.
that's because, as you said at the very, very top, right? I mean, and the statistics back it up. I think people aren't always aware of this, right? I think it's like 97.4% of the economy in the United States or something like that is literally companies with 10 employers or fewer, right?
Yeah,
So
it's an enormous representation. Absolutely.
And those statistics hold true in just about every country in Latin America. I know from my own experiences. And most of the world as well. So yeah, it's an interesting, as you say, a bridge or an intersection between and these are my words, not yours, right? Between kind of the nonsense of the social media clippish headline stuff that happens in politics, right? And especially right now in the United States at the federal level, where we're chasing these headlines about acronyms and phraseology and all the implications that those things supposedly have, because the underlying actual work, right, which is what really Accion is obviously rooted in based on what you've described today, and lots of other organizations, right? The work goes on. The work has gone on. I mean, again, I was born in '68, so this has existed since before me. And obviously, you and I both know, as students of history and politics nerds, right? Like the United States and the world has seen, and the markets that you work in and the countries that you do investments in has obviously seen lots of political changeover and turmoil. Absolutely. in the last almost 60 years,
yes,
or 60 plus years. And so the work continues no matter what we call it. And right now there's a political dogfight around what we call it. But that's also, again, my words, not yours. That's also just a bit of a sham. Right, because the work goes on, because the work is tied to, as you say, the backbone of every economy. And if you're tied to the backbone of every economy, then the politicians and the politics of the era have to eventually fall in line with that.
That's the hope. That's my long-standing hope, for sure.
Right, unless we're having a whole different discussion and it's all going to implode, and then this is the last podcast we'll ever do, right? But we're not going there, I don't think. So, all right, hey, I have a question, because one of the things that jumped off about when I was looking through the website and whatnot was there's a huge emphasis just in the language and how you present your story, as well as obviously then I would imagine programmatically, which I hope you can tell us about. There's a huge emphasis on empowering women. And I would love for you to talk to us about the economics of that, not just the gender equity of it, but like why women, small business people, microfinance for women in developing communities, either here in the U.S. or abroad, is such an important part of this.
Yeah, well, I mean, to put it bluntly, it doesn't serve anyone well to eliminate 50% of your potential customer base. just by saying we're only going to serve products that they're catered to men. Um, I'll approach this from a couple different angles. One is going back to the roots of microfinance. Actually, a lot of the organizers of these of these non-traditional lending services, these lending circles in communities, were run by women. They were managed by women because many times men would have their own, they'd be farming, they'd be doing something like they'd have some other, they'd have a job that like that employer's providing, and then in the midst of all that, though, a lot of the women were actually managing the finances of the home. And so it's pretty interesting when you see that the origins of it all are rooted in that. But I would say is that, there certainly are industries, we talk about, kind of disrupting these legacy industries. You'll find surprisingly that there are some of them that are that have a large, like a plurality, or a larger representation of women than you would expect. So truck drivers in Pakistan, for example, I think it's something like 40% of them are women.
That's incredible. I like,
It's
who would have known that?
it's fascinating, right? And so, we have a company, Trucker, that is based in Pakistan, that is doing that is basically providing. They're working with larger manufacturers and essentially those who need to avail trucking services, and they provide like a platform that can be used to manage a lot of time these solo or two truck owner operator fleets that exist throughout the country. But anyway, a good chunk of them are women. You have a lot of mobile money agents in markets in Africa that are women. And then you have some industries like in raw manufacturing and raw materials in some of these markets that are not as heavily represented by women. So I guess fundamentally, like on its face, like, look, you don't want to eliminate or reduce the number of potential customers you have in your consideration set. But at the same time, I think the question you're probably getting to is what are the specific attributes or ways that you can deliver financial services to women more effectively that would require a bit of an extra lens. This is actually I think it's a hard question, because I think as I mentioned, just as there is a broad diversity and surprise and actually what representation of a certain industry is women, there's also just different behaviors. And so I think in many ways, when we talk to our companies, and really across the entire organization, we think of things like available amount of time that men or women have to avail financial services. We think about historic discrimination against women. In many cases, you have certain countries by which even if a woman is receiving like a higher share of income, it still is all under the ownership of the head of household, which is usually the man. Um, and and then also it's just what is the aspect of like a day-to-day life that a woman has in a certain market. So you have
Yeah.
to think about, so that has questions um, around ability, stability, will, and skill, which are the kind of these four different criteria we think about when it comes to financial services.
Say those again. I love that. Say that
Um,
again.
ability, stability, will, and skill.
Okay. I love
So,
that.
ability, and this is ability to repay, stable sources of income, the willingness to repay those things, like can you make good? And then skill is, do you have it's both the financial know-how, but also I think the employability.
Yeah.
So as you can imagine, in markets that have historically, not advanced opportunities for women as much, they oftentimes score lower on those. But at the same time, what you can do is then begin to discover what are the sorts of or what are the sort of ways you can explore someone's lendability on those four criteria that does not have the same kind of traditional criteria that you would evaluate like anyone around. Um, this is ongoing. I think it's something that we've done a lot of research on. I think we found a lot of things around the value of what we call tech and touch, and the ability to not only have trying to just market an app to somebody, but then also what are ways you can bolster that with in-person visits, training, resources, whatever it's going to be. but it's yeah, I think we're still learning more about that across the entire organization. And there's I think a lot of good research that our think tank, the Center for Financial Inclusion, has put out on the topic as well. That I think I would
Wow.
encourage people to read up more on.
That's awesome. I mean, it's inevitable, obviously, that you personally, like on your journey, you become much more then versed in and aware and educated in the cultures and the context of these different countries, these different sub-markets, cities, et cetera,
Yeah,
cultures. And organizationally, obviously, it sounds like there's a level of institutional knowledge now that
yeah,
exists.
yeah.
Do you still find either, and I don't know where this would play out, maybe at the level of some of your institutional limited partners, although I would imagine that they're so supportive and they've been supportive for so many years, it doesn't really pop up. But maybe just in kind of just discourse in your own life, work in the industry, quote unquote, when you talk about what you do you find that there are still just normal misconceptions or misunderstandings about what it's like to invest in emerging markets? And if you do, like what are a couple of those that you hear all the time, right? That people just misunderstand what you guys do.
Yeah. Well, it's I don't really fault people for it. I understand. Like, I mean, I'll be transparent. My most of my career up until about 6 years ago was very much oriented on, aside from a stint I had at the World Food Program for a little bit, was very much oriented around the U.S. And so it's fairly easy to kind of get caught up in the notion of what expectations you would have of other markets simply based on your lens of what you see in the U.S. Um, I mentioned an example of one of the things that surprises people is what I mentioned about the risk-free rate, that what it takes to actually lend from a financial
Right.
institution in some of these
Yeah.
markets, and just how extraordinarily high the interest rates are in some of these markets. Um, I think there's misconceptions around the ease of opening a business, um, and I think there's also misconceptions around actually how resilient people are in these markets and their ability to really find unique and interesting pathways. I'm not surprised that we're starting to see more successful startups emanate from places like Nigeria and Kenya because I've been both places and I'm like, you really got to figure it out to to survive here.
Yeah.
You really have to like be very creative in how to navigate these places and so I think there's I always just say don't sleep on those countries, don't sleep
Yeah.
on Indonesia, don't sleep in Nigeria because there are going to be some incredibly powerful companies that will continue to emerge from those markets. Um,
Some of it might just be, like you said, just lack of awareness and exposure, right? Just people like if you and I are the average Midwesterner growing, I mean, like myself is a similar case. Like I didn't travel outside the US like for any
yeah,
substantial reason until I was like in my mid 30s.
yeah,
Right. And
totally.
but then when I did, holy cow, like it wasn't for vacation, it was for business and it was to Taiwan and China and much of Southeast Asia in 2003, and that was like like a master's degree education in
Oh, sure. And you
what the
go
world is
right.
like. Yeah.
Yeah, I mean, going in that time too, just you were seeing China go through just immense.
Yeah.
I mean, I
Yeah.
remember being in Shenzhen in 2006, and just their population was doubling every year.
Yep.
It was wild.
Insane. It was literally. Remember, we used to joke in our world it was the wild wild west,
Yeah,
right? Except it was the east. It's funny
exactly.
you hit on something just now, and I just want to highlight it because I think it's a great context for people who don't think about things outside the U.S. I was going to frame it in a question earlier, but you've already talked about it. I read a book called Ugad, which is the Hindi word for innovation,
Mm,
Juugad. And then I happened to have the good occasion to meet the author, Navi Raju, while
yeah,
I was in Chile. And we
yeah,
got to have lunch and have a conversation. And I've kind of kept up with him since then. And it was that. It was this idea that real innovation really is at the ground level. It's the most local of local things. And it is born out of real problems and then the need to create real solutions. And his book, which again, we'll put that in the show notes as well, it just amplifies exactly what you were just highlighting when you say that some people are surprised when they find out that such and such a company or such and such an innovation was built in this quote unquote village or
yeah,
backwater part of the world. Yeah, it's
totally.
amazing.
Well, I'll also make a point here too that one of the other surprising, and this was surprising to me too, is a lot of countries also are really, I'd say, are kind of leapfrogging the U.S. when it comes to regulatory innovation. Um, I took a course. There's this group called Digital Frontiers Institute that is ultimately focused a lot on kind of giving broader perspectives on global banking, global financial solutions. And the class was on regulatory policy. And in my research, when I was taking this classes, I discovered that um, the laws around digital banking, you have certain markets, and of course these are smaller markets, so you should expect it to be less complex. But places like Nigeria, Kenya, or even India, which is much bigger than the U.S., are very clearly laid out. They have structured frameworks around it. They have reference points to it, and are able to always point back to those. And I looked at the U.S.'s, like a basic question of what's the U.S. like? What is your home country's policy on digital banking? And what I discovered in that is that it's a tangled web of different types of regulatory policies that are some of which are being constructed, some are still in conversation or in committee. I was like shocked. So how is it possible that the strongest financial market in the world doesn't have like a clear line of sight on what digital banking regulation should be? I was like shocked by it, and I
Yeah.
think other people would shocked by it, be probably quite shocked by it too.
Well, and especially when you juxtapose that against, say, either the truth or the belief that we're the country and the different regions that are churning out these leading fintech companies and these new financial tools and apps and platforms, and that's one of the things I want to ask you about before we kind of start to finish up here is these things around like how we use AI and the blockchain and crypto is a whole other thing, but that gets looped into that discussion point, right? And there's this mythology, right, that like we're obviously creating all the best, coolest stuff. And what you've already answered the questions that I was going to ask, like you've highlighted through stories and anecdotes, is in many cases, not all, but in many cases, actually we're lagging. Like we're like the leading indicators of both regulatory policy wise, as well as actual like modeling at a consumer level, as well as institutional kind of organizational stuff is happening outside of the U.S.
Yeah,
And
yeah.
the U.S. would be well served to follow some of those examples.
Well, it would be, and I mean, there's a philosophical question too around how much responsibility the U.S. wants to continue to place on the private sector versus kind of setting a good centralized governance framework around how to build this. And that's ultimately the success of things like UPI or Pix in Brazil is they said, look, we're just going to build the rails for you all. We're going to build the protocol, and then you, entrepreneurial community, build on top of that. Decide what you want to do. But it actually helped with with some of the what's the word, like the rent seeking behavior that you have with a lot of these
Right.
companies in the US is that look, if UPI is no longer, you're not charging like a transaction fee on all of this, or in M-Pesa you're not charging a transaction fee, then the entrepreneurs have to decide, okay, what is it, how do we build a good business model around this rather than just kind of like extracting like a fraction of a penny on every transaction. I really liked, I had I wrote our thesis on Web3 and how I saw it was innovating in emerging markets. This was a few years ago, and I actually had I did a podcast series on it too that summer. This was kind of right at like the it's kind of at the peak of the Bitcoin or the crypto wave. It's actually kind of maybe on the downward, kind of hitting the winter. But I had a good conversation with Paul Nelson, who was at USAID at the time, and he had a really great set of anecdotes around how he wanted to be technology agnostic around delivering on financial inclusion. He said, what's more important for me is not the technology, it's whether or not consumer protection, delivery of services, and affordability is really central to that theme. And almost like put your technology up against a framework of those dimensions and say, am I innovating this simply because I'm trying to think of a way to do this in a more responsible way, or am I doing this because I'm going to extract value from my customer? And I worry
Okay.
about is that I think a lot of innovations are trying to do more of the latter,
100%. Yeah.
which is ultimately detrimental to financial inclusion. So
Yeah. And when they're going into these non-US markets, right, these faraway places, they're seeking users and audience, right? They're not actually seeking to help build better systems there.
Precisely.
And
That's right.
oftentimes they're, as we used to say, and I'm sure you've said it a million times in your own career, like they're just parachuting in, right? They're not slowing down to study and understand the context or the history or the context of gender in that particular country or the distribution of how many truck drivers are women in Pakistan, or like they're not taking the time to do that. They're just literally like, I'm going to drop in, I'm going to spin my show, you're going to be wowed by it, and then we're going to add more users, right? And then we're going to go back to over there.
Yeah, and there's
the
not,
rent
and
seeking lens is important.
yeah, and it's not always, there are certain examples of how this has worked well. You look at, you look at some companies like Rappi in Colombia and Gojek in Southeast Asia, they've really moved across multiple markets. And you could even say that Nubank in Brazil has moved across multiple
Yep.
markets, and that's actually provided like a good and accessible set of services to customers of varying income levels. So it's not like every single situation has these negative
No.
externalities.
Yeah.
It's more like it, but I think there is an importance of doing it in a responsible way.
Yeah. 100% true. All right. I've got one last personal question before we get to our last question in the last segment. We talked about it in your intro, right? Like your career began in aerospace engineering. Like
Yeah.
how did you get from there to here, and why?
I wrote a blog post about this as well because because I got this question often. I wrote it about a year after I joined VentureLab, but um, I think really the inflection point for me, and I was kind of like you, Rob. I didn't leave the country till I was 22. I didn't have really exposure to emerging markets at all. Grew up in South Dakota, and I think how would it be possible that I would actually start to build a career that was oriented around these emerging markets and fintech in particular. I started really thinking about this when I was an engineer at Boeing, actually. And I stumbled upon, I can't remember exactly what it was. I think I had gone to I think it was Joseph Stiglitz who had just wrote his book, Globalization and Its Discontents. He gave a talk in Seattle where I was living at the time. And he referred to a couple of other economists that by name, and one of them was Jeffrey Sachs, who had also just wrote a book called The End of Poverty. Anyone who's been involved in the international economic space would maybe have some criticisms of what he wrote, but he talked a lot around the International Monetary Fund, and I found this all really fascinating. I was like, this is a
Yeah.
this is a really interesting problem that'd be fun to try to solve. But what would that look like? And I kind of set in motion a lot of different things. I applied to business schools and decided to get a public policy degree as well. So I went back to my alma mater. I went back to Michigan, did a dual degree, and I spent a lot of time while I was there focused on international development and corporate strategy. And as an engineer, I just didn't have a lot of experience in working in business, but I want to just kind of keep building all these different, I think, broader building blocks to become more knowledgeable about these topics. So, did that for grad school, and then went to strategy consulting for a couple of years and just kind of build the basic fundamentals of business across multiple industries. And then went to the World Food Program and learned a bit more around and also like working with a team there that was focused on really making the World Food Program more efficient and economizing this $2 billion aid organization. And then moving into tech and seeing that tech was the interesting intersection. I felt like tech was a great catalyst by which you could actually innovate in large scale across these different types of economies, nationally and globally. So in many ways, fast forward to 2019 when I joined Accion, I think for me, in many ways, I had been looking for the opportunity to bring all those pieces together of I believe in tech, I believe in founders, I believe that there is an opportunity in markets outside the U.S. for this world to just blossom, and as a result, because you're equipping businesses, small businesses in particular, that this is going to result in hopefully a sea change in lowering poverty rates, providing greater economic opportunity for billions and billions of people. So
Love that.
I feel like it was part of it was very, I think, happenstance, but I think it was also a little bit calculated. And it
Yeah,
just took
no, clearly.
it took a lot longer. I guess that was a journey of about 13 years from applying to business schools to joining Accion. And now I feel like it's great because I feel like every single day I can hone my energy specifically on that topic at hand. And whatever my
Nice.
career looks like over the next 20 years, I think is going to be oriented around specifically this this challenge in whatever way I think is whatever the next interesting, unique way would be to try to solve it.
The thread that I hear popped up in multiple sentences there was like a problem, the word problem, right? So you still essentially have grown up to be the engineer that you were, right? You're
Yeah,
still applying an engineer's mindset. You're just applying an engineer's mindset to constructing solutions to problems, right? So using very engineering oriented words, right? To constructing solutions to various problems and the component pieces of problems, or the componentry of how do we scale the solutions to these problems that we know exist, right? You're just applying the engineer's mind, which is obviously embedded in your DNA,
yeah,
to societal level opportunities for change and problems that need solving, which is
yes.
awesome. We need
Now,
more of that.
I would offer the caveat there is that unlike certain people with an engineering mindset who just try to blunt force fix problems, I won't speak any names, but the human dimension behind all of this cannot be overlooked. I always joked when people when a certain engineer uh, bought Twitter, and they're like, well, he can build rockets. I'm sure he could fix Twitter. I'm like, those are such different things. As a former rocket scientist myself, I can tell you, it's very, very, very different things. Um,
No, 100% true.
yeah,
No,
and
and it's
yeah,
not a binary one or the other world, right? And again, you are the synthesis of all of that. And this is where you said very calculated, right? You were very intentional about your own, I'll say it this way, my words, like you were very intentional about your own growth, right? So you looked at yourself in some ways, as I heard you describe yourself, as a problem to be extrapolated and or scaled, right? And you
yeah,
looked and said like, okay, so here are my strengths, here are some weaknesses I have. I'm going to go about filling in those weaknesses with education, with knowledge, with information, with relationships, with acts. Like then I'm going to wind up some version of a fuller version of myself as the
yeah.
product, right?
Well, yeah,
And
I
it's
also
just taken you a long time, but also, by the way, it's never ending. Like
yeah.
you will apply that mindset, whereas maybe the other guy that we were referring to loosely there has stopped applying his mental acuity to anything.
Yeah, well, but I guess so. To your point though around me using the term problem, I think a lot of this just stemmed out from like a sense of I would call it either dissatisfaction or just emptiness with what I was doing at the time. Like, there was something in there that said, I feel like there is more for me to explore. That tension oftentimes, my wife would tell you that, sometimes I do look at the world from a bit of a pessimistic, or I look at my circumstances from a pessimistic lens, but I think it's more, I think, attributed to, and I go to therapy to figure that all out, like
Yep, yep.
what my origin is for all that. But there's something there around, I think, always wanting to be, I guess, constantly like trying to do something better, and be something
Yeah.
better. That and kind of leading into that dissatisfaction a bit, not let it consume me too much, but to let it maybe help drive a decision that will bring an extra level of satisfaction and hopefully ostensibly make other people's lives better as a result and not just my own.
No, I love that, and good for you. I mean, it's what you just described is the underlying sense that I've had in the time we've known each other from afar that to me defines you as an entrepreneurial thinker, right? So the definition kind of emanated from me looking in the mirror myself, right? And I've always said for 20 years I'm a pragmatic optimist, right? And people are like, what does that mean? I said, well, as I think all entrepreneurs ultimately, or now I broaden it out, say all entrepreneurial thinkers, not necessarily an entrepreneur running a business, but an entrepreneurial thinker is someone who is deeply aware of the conditions on the ground around us. So that might be some of the pessimism, cynicism, like okay, I see all the things that are wrong,
Yeah,
right?
right.
But the optimist part of it, we choose to lean into the possible,
Hmm.
right?
Yeah,
So that and then that begets kind of this constant pursuit of the better. Like, can we do better? Can we be better? As I talked about you in the very beginning. All right, last question to wrap
sure.
up, and I'd love to try and make this question a little bit more tactical, practical. I might make it hard for you though. So you just said like your whole experience is synthesized down like a lifetime of points of view and experiences and into what you do now, and it brings you so much joy as well as fulfillment, right? So if we're talking about kind of this world, the view that we've talked about in which Accion exists, and we believe that its work is important, and therefore we believe people like you, hell, maybe we don't need 100 more Accions, we need 100 more Matt Schaars, right? Or 1,000 or 1,000,000 more of you. In that world, right? In that world, how can you and I come up with, say, 2 or 3 obvious ways to apply more entrepreneurial thinking to this, not just venture, right, but to this entrepreneurial economy building industry that we live and work in, right? So how can we say, like, what 2 or 3 tactical bits of advice might we be able to suggest now in closing that would help this industry, this broad industry, kind of become better distributed, more representative, and more impactful?
Yeah. Well, I think part of the answer that comes to mind initially is it's things like this. I think it's um, I want our industry to move out from a place of information opacity or translucency into a place of true, like, openness and honesty. Um, if there's something I've learned about the venture industry in my short time here, is that there is a lot that happens behind the scenes, that oftentimes is I wouldn't say is held back, but I think is withheld because either it's a belief that there is a competitive advantage to withholding that information, or I think moreover is actually a belief that that that's information that's not important or necessary to share. Um, I think there is there I think, but I actually, what I would say is, like, I think what's encouraging is I have seen, I think, more investors being more transparent with the way that this industry works. I would like to see more of that. I'd like to see, in particular, I think the whole, like, Peter Parker adage of great power, great responsibility. Um, I want to see that at the highest levels of the industry too. So what is it that we can hold our fellow investors accountable to, and to ensure that they're also trying to build an ecosystem that is really accessible and I dare say equitable. I don't think that's going to be an aspiration, but I think there
Right.
is something around steering founders toward the right type of, or the right sources, and right and responsible sources of capital. And so I think what that means is, how do we elevate some of these programmatic solutions that are existing in local financial institutions? How do we ensure that small businesses are getting the capital they need? How it is that we can work in regulatory bodies and with Congress to make sure that we're not just trying to hoard capital within the venture space, but really kind of distribute it as effectively as possible to the entrepreneurial ecosystem. And I think, specifically to the emerging markets space is, continuing to demonstrate to investors, LPs and fund managers alike, that these markets are really fascinating and are ones that they should look more into, and partner with organizations like ourselves who know these markets and have spent most of our operating career in. So there's a handful of things there, but I think a lot
I
of it
love
is
that.
information sharing.
Yeah,
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 no, I love that. Yeah, that's those are hugely important pieces of advice and wisdom from your own experiences, right? That people can apply. And also, I'll just say this in kind of closing, and thank you, buddy. This has been a pleasure. It's been, honestly, sometimes there are just people that we're connected with that we built, and these are real relationships, no matter if they are remote or digital or whatever. That you just know that, like, I was excited when I woke up this morning on a Monday, and how many people get to be excited about what they're doing on a Monday because
yeah.
I knew I was talking to you. And then I know who I'm talking to later this afternoon in a second interview, and I'm just excited and grateful to have these conversations with you. But I think I want to highlight something, again, my words, not yours, that in the end, in your closing statement there that you made, which I think is important for all of us to remember, especially today, right? We're recording this in the middle of March 2025, and everybody knows what that means in a broader context of our current world. No matter how many times people in power say that this country first, or this first, or that first, or make this, like, the reality is, like, the global community and the global economy, and just the global populations, as diverse as they are and in as far flung away places as you and I have had the pleasure to travel and get to know people, we're inextricably linked. There is no, I don't care what we call it. I don't care what we like to demonize it at. Like, there is no pulling it apart in this century. And so as long as that persists to be true, as you say, that's a pathway that investors, organizations should continue to explore and should continue to try and both provide value and realize that there is an immense amount of value for them to benefit from, not necessarily just extract, but to benefit from. Because the inextricability of all of us on a communal basis is inevitable. Again, no matter like what forces are fighting against that truth right now, those forces lose in the long sweep of history, because history continues to tell us that. So that's awesome. It's a pleasure, buddy. It was a great pleasure. It was so much fun. It was informative. Like, first of all, from obvious my faux pas of Accion versus Action. Thank you. But now your team at Accion will be okay. Now we can publish this episode later.
Right.
But so thank you for that. But how do we find, if folks want to find and follow you, how do we find and follow you? And then more importantly, maybe how do folks find and or follow, get connected to the programs of Accion?
Sure. You can go to our website, starting with that, accion.org. You can learn more about our different components of advise, invest, and influence, as I was mentioning. Accion.org/VentureLab is where you can find more specifics about our fund. I am on LinkedIn and I am on Blue Sky. My Blue Sky is Skepto Capital. So I actually write a blog that is a bit more critical, I think, of some of the things. It's my own personal blog.
Thus the title.
It's my own personal blog where I speak a bit more around the things that are happening that I'm observing. And it's I don't write as much there, just occasional missives, but most of my content now is on LinkedIn, if anything.
Oh, that's awesome. And I can assure our listeners and viewers that you are a worthwhile follow in that sense, that they should go and find your blog. They should find you on Blue Sky. They obviously should find and learn much more about Accion and what it's doing on a global basis. So This is an absolute pleasure, buddy. Thank you so much.
Of course.
Well, I hope you enjoyed that episode as much as I did recording it. As always, we thank you so much for listening and watching. Today's show was recorded here in Los Angeles and produced by the incomparable Deanna Bernal in Mexico City. You know, we can only grow this show by you listening and sharing the show with friends. So please find, like, follow, subscribe, and share our audio-only show on Spotify, Apple, or via any other popular podcasting platforms, as well as find the video version of our show now available on our YouTube channel over at Entrepreneurial Thinkers. And of course, you can follow along on our various social media platforms for fun and informative clips and content at Entrepreneurial Thinkers, wherever you can find us. And if you'd like to connect with me, you can find me at I Am Rob Ryan on just about any social media platform. Gracias, thank you, and have an awesome day.